I don't understand the markets. Nvidia posted great profits. Stock went down. Yeah. Yeah. Welcome to earnings. It's more than just numbers, right? It's got to beat expectations. Nvidia in the last what 12 months is up from 125 to 260, and hell, it was at 350. So there's a shitload of market expectations built into this, right? Like, this thing has to crush to keep trading at the multiples it's trading at. I mean, let's look at their Yahoo real quick. We know they're gonna have a strong balance sheet, so I don't need to tell you that. But what's their PE ratio? 51. They are trading 51 times their earnings. They have to kick ass. They are expected to absolutely kick ass. That's why even when they seem to kick ass, it might still go down because they're not kicking enough ass. You know what I mean? They're not kicking enough ass. They're not meeting their multiples like they're supposed to when they're trading at crazy multiples like this. Yeah, their price to sales is 27. It's wild. Obviously, strong books. I mean, 21 bill cash. They have double the cash that they have debt. Their EBITDA is the same size as their total debt. That is stupid strong. EBITDA being the same size as your debt, stupid strong, and double the cash. I mean, they're obviously, it's Nvidia. It's a very fucking strong company, but they're trading at redonkulous multiples. Which is, once again, to sound like a broken record, why, even though they can kick ass and still come down. Gotta kick more ass. Had you just guesstimate the valuation? I didn't guess. What do you mean? When did I guess? Valuation's right here. They are trading at 51 times their this is price over. Oh no. My mind just went blank. Oh, earnings. This is price over earnings. They are trading at 51x their earnings. They're trading at 27x their sales. Meaning their stock value, meaning their market cap, is 51 times higher than their earnings. I don't see straight earnings numbers on this. But you can look at, you don't need to look at it because it's doing it for you here, but you can look at that math yourself if you need to break it down. Market cap over earnings, yep. And then there's price over sale, price over book. You can make any multiple you want, right? PE is just the big one. PEG ratio is fun. I actually am not 100% sure how PEG ratio is figured out. I guess, actually, no, I do. I was thinking, like, I don't know where the expectations come from, but I guess they're taking... I mean, how far out do analyst expectations go? I guess at least 5 years. PEG ratio is a fun one, though. This is price over earnings and growth. So it's what are they trading at based off of their expected earnings over the next 5 years. Even what they're expected to hit, they are still trading 3 times more than that. Even with their crazy expected growth over the next 5 years, they're still trading 3 times higher than that. No, that's what they're trading at very, very, very high multiples. Let's look at Tesla's. Tesla's always this is always fun. Let's look at Tesla's multiples. Although they've probably cooled off a little bit. But let's go look at Tesla's multiples. Tesla's trading at 88 times their earnings. Tesla's trading at. They're actually trading at, look at this, that's actually funny. Their price over sales is actually smaller than Nvidia, and their PEG ratio is actually smaller than Nvidia. But look at that PE, 88. Ew! Meaning, when Tesla has earnings, they've got to dog stomp those things. They've got to I think they did. I think right here, didn't they beat top and bottom line, which was really unexpected, and the stock still came down? Everybody was asking the same question here. Oh, Trey, why is Tesla coming down? They crushed earnings. They didn't crush them enough. They are expected to crush earnings. They're expected to fucking destroy earnings. They didn't destroy them enough, according to where the market had them valuated, apparently. Down. That's like a really long answer to your really simple question. Does that make sense at all to anybody in chat? Or am I just ranting about nothing? I don't know.